Hi, I'm Kirsten Chang, and welcome to another episode of ETF360. Today, I'm pleased to be joined by Matt Kaufman of Calamos Investments to discuss CPST and CPNS. And Matt, Calamos started out as a convertible shop, but you've really become the pioneers of ETFs structured to provide 100% downside protection. Can you tell us a little more about how these funds work?
Sure. Thanks, Kristen. Good to see you. The structured protection ETFs are designed, like you said, to deliver 100% protection relative to a broad index like the S&P 500 or the NASDAQ 100 or the Russell 2000s. We have small cap exposure as well. So you get protected exposure to those indexes, up to 100% protection. And then you get upside growth opportunity to a cap. So, there's no free lunch in investing. There is not that here either, but you get capped upside exposure, to around 8 to 10%, depending on the index that we're referenced or tied to. So just to rephrase that, you get upside exposure to a reference asset with 100% protection over a 1 year outcome period.
Got it. And how are advisors using these funds in client portfolios right now? Are they using them more as core strategies or have they been more supplemental to core index strategies?
Yeah, we see a lot of advisors today using these as bond alternatives. You think about the opportunity that you might have to buy a CD or a fixed income product that's going to pay you a set income. Well, then at expiration of that product, you're going to pay ordinary income taxes on that income that you've received. And so if you tie your money to the equity markets through the structured protection ETFs, you can tie your money to the growth of the equity market, again, to a cap of around 8 to 10%. And then you still have that risk management level built in. So we're seeing a lot of advisors access these products and using them as bond alternatives because they get the risk management potential. That 100% protection provides strong risk management. You get upside opportunity to a cap. And then the other way we see people using it is to de-risk equity exposure. Some clients of advisors have ridden the equity markets up, toward all-time highs. They want to capture that growth, lock in some of that growth, but protect it going forward. And so they're meeting with their advisors, determining how much equity risk to take off the table, but they're using the structured protection ETFs to de-risk that equity exposure because it allows them to still participate in upside along the way, but protect the gains that they've gotten.
Yeah, speaking of de-risking, I got to ask you about the sharp sell-off we saw
Sure.
in early August. The volatility index, the VIX, that broke above 65.
Yeah.
So how did these ETFs fare during the sudden volatility spike?
Yeah, if we look historically, the buffer ETF space, which provides partial principal protection, a 10% buffer, 20% buffer, that space has been around for about 6 years now and has done extremely well through the volatile events that we saw back then. Went through COVID, went through the recent vol spike. The structured protection or the 100% protected space, I'd say is an innovation and an offshoot from that. And same way, those have delivered on exactly what they said they would do. To give you an example, we launched CPSA, our August S&P 500 series, on August 1st. So good timing for a market drawdown. We saw the market draw down about 6%, over the next few days. CPSA's drawdown, was only around 60 basis points or so. So we saw remarkable protection even along the way. That protection level is designed from point to point, but because we own an at the money put inside the portfolio, the protection level stays very strong all along the way. And so, as we expected, the products held up exactly as we had anticipated that they would, but good test, out there in real time. And we've seen advisors, move in as they're building trust in these solutions.
Definitely. And what's coming up in the pipeline? When are the next series of ETFs coming out? What are you guys focused on next?
Yes, so September 3rd, first business day in September, we're launching CPNS. That's 100% protection on the NASDAQ 100. And then we also have CPST, the S&P 500 series, both of those launching on September 3rd. And then moving into October, we have another S&P series and then the Russell 2000 series in October. But September 3rd, you can get S&P exposure or NASDAQ exposure over the next year with 100% built-in protection.
All right, well, there you have it. That does it for ETF 360. Thanks so much for joining us and tuning in to watch. We'll see you next time on ETF 360.